Hello guys, this is Mariano from the Trading Parrot. We started this week saying that we were expecting to see big volatility. And that's precisely what we have seen so far. But I think that this is just the beginning of the volatility. Indeed, less than an hour ago, I got these notifications from Quant talking about $1.7 billion in deposits. That's roughly 24,000 Bitcoin that is reaching exchanges on Coinbase. We need to talk about that. That's probably the most important thing going on at the moment. Why are they depositing? What could come next? And in this morning video, I talk about the scene of the crime, shall we? I said, the point of that video was to make you aware that I was thinking that this breakout from this bull flag that we had at 1 a.m. in UK time, in the morning when I saw it roughly around 9 a.m., I thought it was going to fail. You can watch my video in the morning and you can see that it broke out, it became just a liquidity hunt and it got dumped below the range of the bull flag. That is a complete failure. I want to talk about that, why I think we came at this level, what's the future of this bull flag breakout that we spot on Sunday, and what's going to happen with the missing 1K for the target. We look as well into the daily time frame, the leftover liquidity that we have down below us, still potentially attracting us a bit further down before we decide what comes next. Guys, make sure that you're subscribed to the Coin Bureau Trading. I publish roughly 3 videos a week, typically the evening update. If you want to stay informed morning, evening, every day of the week, then make sure that you are not just subscribed to Coin Bureau Trading, but also to my channel, The Trading Parrot, where we go heavy in every single move of Bitcoin. Let's do a summary of the events today, because many things have changed. We are not talking about invalidating the breakout, just to be fully clear. On the monthly, this still looks great. My hope was to close tonight, the last day of October, above 71.3K, because that will turn the candle of October in the highest closing candle monthly in the whole history of Bitcoin. And that is a big deal, of course. The problem is that at the moment we are seeing a rejection from that level. We are roughly a couple of $100 below that resistance. In a similar way, we got rejections from May and June, but so far we haven't undone much of the green candle. Of course, I mentioned this information, which I call it the most important information of the day, which is the inflows. We started the day with $575 million, 8,000 Bitcoin, followed by another 1,000 Bitcoin, both of them going to Coinbase Pro. And then we got this summary in here, which I'm not fully sure if this on Quant is a summary for the full day, if it includes the previous alerts, let me know in the comments. But if these are separate events, we can see that there is 1 billion roughly in the lower end, plus 600, 700, 1.7 billion, more or less 24,000 Bitcoin. It's pretty substantial. And so far, we haven't seen any of that reflected on Big Well Explorer, which uses the data again from Quant, the ratio between deposits and withdrawals. But since this data here is listed on TradingView for free, it doesn't update as frequently as if you subscribe the notifications directly from Quant. So that is just giving us a heads up. And now we know that potentially tomorrow we should be seeing the Big Well Explorer doing a spike up. Hopefully this is just gonna get and kiss once again the moving average, and maybe there are further withdrawals and things end up balancing out in a bullish way. In this spike in here, that was the case. That happened on the 20th of October. There were further withdrawals and it ended up closing at 0.68, which is still in a ratio when withdrawals are larger than deposits, which is the typical behavior that we expect during accumulation periods. So crossing fingers, tomorrow's update, which is going to be in my channel, The Trading Parrot, we'll see and assess the damage on the 1st of November, assuming that this data from Quant in here is correct, is accurate, and they don't discard it, saying something like those were just transactions, internal maybe ETF transactions and no one should really care about them, which could be the case as well, a false alarm. We've been seeing that we entered today into extreme greed. I think the last reading was 77. And we also started seeing retail to start looking on Google for the term Bitcoin more frequently with a number of 24. That together with extreme greed typically signifies that there is a huge amount of risk. And we've been talking about that all week. I keep mocking and trying to push back people that just want to buy, fearing missing out and then selling at a loss. And I think that is not the point. That's not the way we do it, at least. And another thing that is quite annoying me is that yesterday I published this video making sure that you were well informed that there is a huge bullish signal, and we were 1 day away from confirming it, which is today, tonight. But unfortunately, with the move down that we have on the swing trade, that was enough for the bullish cross on the monthly time frame to not really cross each other. You cannot see it in here, but if I zoom in on the monthly, you're gonna see that they are not exactly crossing each other. There is a separation microscopic of 0.3, something like that, in a scale of 1 to 100, which is very small, but we need that cross to be able to use all the outcomes that yesterday videos at night we cover in detail based on the past performance. What should we be expecting if tonight we were to see the cross in here? We talk about 2 different scenarios and everything. And I say that the lowest likely scenario was that we see a dump large enough to undo the cross. I thought that we needed to get even lower than 67 to undo this thing, but indeed we went just to 70 and they stopped crossing, which is extremely annoying at the moment, particularly because I say it was very low likely that we undo it at this point in time with just a few hours away from the closing price of October. And I have to say, guys, there has to be some sort of manipulation that in the last day on the month, they try to undo the breakout. And you know, this morning I talk about the 95 million that they now place on top of the price, slightly smaller than 123 million that we had a few days ago protecting the 70k. Now at 73, 74k, there is 95 million holding the price. They've been spoofing the market in such a way, if this was traditional assets, there will be a bunch of dudes in jail after this. But this is crypto, this is a jungle, higher risk, higher reward. And yeah, unfortunately, it seems to be playing out the fact that we made it to the top of the range on the longs versus shorts. You can see that we are seeing now some sort of rejection there. Maybe this was the top for this area of the channel. In the order book, I didn't see any significant plays with limit orders waiting there. And indeed, there were orders to sell at 77 and 78, which now are gone. The orders at 46, 47 left on the 29th of October, which was looking pretty bullish. And now we can see that they moved them into 50k, but a lot less volume than compared to before. And this morning we were looking at the price action. We look at this and we say it's a very tight range. We are barely moving, very small chunks to take some shorts and to take some longs, all of them trap. And then we assess how much are we accumulating at the top, how much we're accumulating at the bottom. We look at that 70k, we overlap that with other signals coming from fair value gaps, the selling wall that we have at 74k, and a bunch of additional things. We look at the rolling over of the RSI. We talk about these wicks in here, that it looks a lot more like a failed attempt rather than a successful breakout. And in this candle, we started calling for a fail of the breakout. I said that it was more like a feeling. Indeed, and sometimes I use a lot of data, but I end up taking decisions with some feelings. That's me. It's just the gut feeling. When you look at those candles, when you look at the data, and something tells you there is something off. After seeing it so many times, I guess you can respect that as long as it's profitable for you. And look at what the move did. After the breakout, we went all the way to the top, and then we broke the healthy support, the 64 that we were holding for a few days in here. That support was responsible for allowing the price to even try that breakout because we were holding it. But then it became the enemy because we crossed below 64. You can see here how we cross, and in a single candle, we go straight to the support at 49. That is coming from this trend line that is going down. At the moment, the 4-hour candle closed below the support. So that is not a good sign. And the current candle that is live is pointing down as well. So if we extend this line, touching that support, we can see we already penetrate the previous support, and we are on our way down to the last line in the sand, located at roughly 35. Not guaranteed, but let's look where is that in the price. And that at the moment, guys, is located at 68.8K. That coincides with the previous resistance that was here 1, 2, 3, 4 times. So that qualifies in the narrative of a retest of the scene of the crime. And that's why 6 hours ago, the video had the title, The Scene of the Crime. Shall we? The only thing that was in discussion at that point is how low? Do we go to 67? Do we feel the CME gap that is still there from 68 to 67, which by now, with all that liquidity, all those deposits of 1.7 billion, I'm sure that they have more than enough to take the 67. I don't know if that's enough to completely destroy the breakout on the weekly and go all the way to 54. There is a chance, always in crypto, I will always say that. I think it's very low, but it's possible. And people are asking, what do we need to do now to continue and start hitting the top of the liquidity? Let's not forget, in the morning, we talk about this liquidity in here. There's a lot at stake there. And we need to always counter-think these bastards. It could be the case that they're just looking for a retest successful of that support that we just talked about at the RSI 35 at 68.8K. Maybe we don't go that low, but we need a retest of something that follows that narrative of going back to the scene of the crime, right? We had a breakout as well here on the double bottom, and at the moment we are looking for where to revert back up. Why? Because there's all this liquidity at stake that is the largest that you can see in any direction on the 4 hour, right? This, and it's right below the price. So it's a low hanging fruit, and eventually we should go for that unless these deposits are going to start spiking up and they might know something about some potential crash in the market. I've seen some bearish moves on traditional assets. I haven't had the chance to look into it. This is my third video today, but it's just too juicy to let it go in there. Today, we realized that above 80, now we have new accumulations of super clouds of liquidity pools, and they are also extremely heavy. They started becoming heavy mid-October, and they are joining the full pack that they can get if they hit from where we are until 77 first. Then there is a gap that resumes from 80K into 82K. But for now, for the short term, we have just this last price in here that ends at 70K. Let's look a little bit further down to see if there's anything really substantial. Particularly, I'm interested if there's any overlap of liquidity pools with the CME gap. CME gap is between 67 and 68, and I don't see much overlap in red yet. I see 66.7 is starting to become yellow, but not red yet. Very similar to what we have now at 73.3. And guys, I hope you took a picture of the megaphone pattern. I promise that if my video this morning got 500 likes, I am gonna sing in a video, Can't Take My Eyes Off You, just because the lyrics fit perfectly well to the feeling I have every time I watch that megaphone pattern day by day, looking more and more like the forecast we did in July. And on the daily, if you were following up this morning, we were talking about the candidates to become the target of the scene of the crime visit. We talk about 70K and we talk about 69K. 69 because that is the highest level in here, and 70K because it corresponds with the top of the range defined by the volume profile of the past 8 months. So pretty significant as well. It's also 70K is a psychological levels, and 69K is what everybody remembers as the rounded number of the top of the previous cycle. So both of them, or actually either of them, that becomes coming back to the scene of the crime to give the kiss goodbye before heading higher, will do a perfect job in that sense. And during the week, on the weekly, roughly around the mid of the range, we said that we should be going once more for the top of the range of the channel of the daily RSI. We have done that, we touched it at some point, but the closing of the price determined that the RSI made it to 72, but at some point during the day we made it to 75 RSI. And so far on the daily, we don't have a structure broken of higher highs and higher lows on the RSI. You can see here this high, low, higher high relative to this one, and a higher low. But that is subject to Bitcoin behaving tonight, okay? If those people that are depositing 1.7 billion happen to be actual traders and not an internal transaction, as I said earlier, and they happen to hit the sell button right here, do not be surprised if the RSI comes back and retests this support that we have been religiously respecting. At the moment is located at 50. What a level, the middle of the range. And I hate to say it, but this is not the time Bitcoin for breaking that level and below. That can put a lot of things in risk. And I know I said that in the upcoming days, we should be seeing excessive amount of volatility because of the events, PCE, jobless claims. Sometimes I watch these things, but I get a lot more insights just by focusing on the charts. I watch the charts and we know we need to go down, up. Then I watch the news and the news kind of fit what the chart was already saying. And I think that is the point, that is the beauty of TA. That's something that can be learned and can be practiced. Whereas watching the news, you know that they are selling you bull crap. You know that they are manipulating you. So I don't think there is much point in spending too much time thinking about all these little numbers, rate cuts, and all that stuff. If you want to pick a great exchange to trade, you have 3 options down in the description: Bluffing, Bybit, and OKX. Bybit and OKX are great exchanges that I've been using for years. And very recently, I was introduced to Bluffing. And since it took me just 5 minutes to open 2 accounts on Bluffing, and I didn't even need KYC, they don't ask you anything. So it just works in 5 minutes. And if you use the links in the description, just scroll down, you're gonna find the best bonuses and fees compared to any other crypto channel, really. It's really a no-brainer to go for this offer and get the best deal and support the channel as well. Thanks so much for watching, and remember to subscribe both channels, Coin Bureau Trading, the Trading Parrot. Stay up to date with Bitcoin and learn as much as is needed because it's a very challenging market. I'll see you in the next one. Bye-bye.